Um, Good morning, all of you. We are discussing about the budget and budgeting process. In this chapter, we have already done uh, two parts to learning objective. First one, define the budget. The second part is the budget cycle. So this third one, principles of sound budgeting and financial management. So to consider a budget sound, a good one. So, what are the principles of that? So, according to the Public Expenditure Management Handbook, so it's normally published by World Bank. So, the latest edition is 1998. So, according to the Public Expenditure Management Handbook of World Bank, the following principles are widely accepted as a underpinning sound budgeting and public financial management. So, first one, uh, comprehensiveness. Comprehensiveness, it includes everything. It gives a holistic view. It consists everything, almost everything. Comprehensive and discipline. Second one, legitimacy. So it's like kind of what, so legal, right? The legal, uh, and flexibility. So whenever it needs, so it's not a rigid one, it's not a concrete one, it's like a flexible one, right? So predictability, contestability, it's make kind of competition among the policies. So there are many policy proposals, so among which they have to choose the best one. Honesty when preparing budget. So the executive people, the ruling party should be in honest. They have to behave honestly. Information. The budget is capable enough to provide information itself. And transparency and accountability. So these are the main principles of good budget. Good budget, sound budget. Let's see one by one. First, comprehensiveness and discipline. This is because the annual budget process is the only mechanism available, at least between elections. Discipline decision making. It's very obvious. The government, you know, here the government. So it's a starting point. For example, the government come to the power. For example, 2020, government come to the power, and the government will be last for 5 years, and we can expect 2025. So every year it has budget. So 1, 2, 3, 4, 5 years budget, right? And for example, here already 9 years, so 3 years lapsed. For example, I'm saying that in this period there are much some period the economic grow, people are get more benefit, people are enjoyed a lot, and some period people are very frustrated, people are unhappy about their government government public finance management policy. So it's obvious, right? Some for example, uh, assume that the citizens are dissatisfied, assume that, and the budget is proposed by the political party, especially in the ruling party. And so for example, in 2025 there will be election, general election, right? General election, parliament election. So the ruling party wanted to win the election, forthcoming election. Sometime they have some sort of failures. The budget earlier economic policy, government policy may not success enough, so therefore people may dissatisfied. And so when the election approaches, what the government normally do is they are preparing budget to satisfy the people, satisfy the citizens for the purpose of winning the election. Here, the budget is the only tool, the budget, the only strategy to make a kind of election propaganda to win the election. Budget is the what kind of it's a tool, it's a strategy for the forthcoming uh, election. Yeah, when the election approaches the date, the government proposed budget, most probably the budget will be satisfy the they propose the budget for for the purpose of attracting more votes in the forthcoming election. So thus, this is because annual budget process is the only mechanism available, at least between the elections, to discipline the decision making. You know, in the previous period, in the earlier period, government make decisions that were not welcomed by the general public. Now, through the budget, they are disciplining their decision making process. So, in the earlier period, the government may take decision based on their own preference without considering the mind of people. But when election approaches, the government, the ruling party, try to remedy, right? They are trying to remedy their uh, false decisions, the bad decisions. So they are trying to make discipline, right? Being a discipline and making discipline, making decisions. They are taking rational decision for the purpose of winning the elections. The comprehensiveness requires holistic approach. Holistic approach means kind of 360-degree view. So not only satisfying the vote, satisfying the voters, satisfying the citizens. Not only they are considering only, not only they are considering political motive. So they have to have a holistic view, right? So they have to consider economic development and financial stability and government stability, political stability, right? Macroeconomic stability. So they have to see in a holistic view, 360-degree view, holistic approach. So comprehensive requires a holistic approach. They have to cover everything to diagnosing problems. First, they have to uh, diagnose the existing problem. For example, today in our country we are suffering uh, because of high inflation, price hikes, import restrictions, food shortages, gas issue, right? Fuel issue, a dollar issue, foreign reserve issue. So we have a lot of problems. So first they have to diagnose the current issue, current problem, and understanding all the links. You know, each and every problems are related with each other. Here, the inflation, exchange rate, and the dollar reserve, right? Price hike, unemployment. So these all problems are interrelated. When fuel prices increases, all the price of goods and services will be increases. Price of all other items increases. Finally, it increases the inflation, general price level. Then the value of money, the currency value will be decreases, then our economy will fall down. So they have to understand all the links associated with each other and evaluating institutional impediments. Every organization, the government sector institution have some kind of problems. There are some sort of constraints, underperformance, inefficiencies. So they have to evaluate this kind of inefficiencies to performance. They have to try to make government institutes into well-performing institutions. And then finding the most appropriate entry point to launch reform, pass reform. So by understanding, by looking at comprehensive comprehensiveness, so by the way of a holistic approach, the government, the ruling party, the budget executive people should diagnose the problem, understand the linkages, and evaluating institutional impediments to perform. So finally, then what they have to do? The finding, they have to propose, they have to find most appropriate entry point to launch space from reforms. They have to reform their economic policies, reform economic policies that will eventually expand to become a comprehensive. So when they do like this, so when they diagnose the problem, when they understand the linkages, evaluating institutional impediments, and proposing new uh, policy reforms, so these activities will give an comprehensive view, a comprehensiveness. The budget must encompass all the physical operation of the government. So physical operation, so financial operation. So those include both fundraising as well as spending, money spending, fund spending as well as uh, money spending as well as expenditure. Right? Budget must encompasses all financial operation of the government and must also force, force policy decisions. If the policy is most appropriate, they have to force to implement it. They have to. Uh, the government must also force policy decision having financial implication to be made against the background of hard budget constraint in competition with other demands. The fiscal policy. So in the budget, you can observe the fiscal policy. So what is the government? What are the ways of government revenue? What are the fund allocations, resource utilization? So through the budget, they are forcing the government policy decision. The government policy decisions are implemented through the budget, and the budget has a financial implications. It has some sort of outcomes by implementing the implementing government policy through budget. It has a kind of outcomes. You can observe the outcomes implication to be made against the background of hard budget constraint. In a there are not every budget, every countries some has sort of some uh, constraint. For example, in today present situation, the main constraint of budget is what they have to spend a lot of money, more than half of the money to what? For paying interest rate, paying loan principal amount, and paying what recurrent expenditure. So here almost these expenditures should be allocated. So these are what these portion include uh, interest payment and loan principal payment and recurrent expenditures. So it's a very big constraint for the government to prepare the budget. The constraint. These are the hard constraint. It cannot be avoidable. And the revenue sources. What are the revenue sources? Here the government has very little portion of uh, income, income, right? So they are uh, heavily relies on tax revenue. When government increases taxes, it will increase the burden to the citizens. It will increase additional burden. So earlier the VAT rate was 8%. Government has former government increased the VAT up to 15%, and the present government again reduced to 8%. But the people are unable to enjoy the tax reduction. So therefore, government also not able to raise fund, as well as the same time the citizen also unable to enjoy the reduction of tax VAT. Ultimately, the intermediaries, the business people, take the opportunity on that. So it has it gives not much impact, significant impact on the public revenue as well as the citizens. So this is a hard constraint. So the, the good budget uh, should should proposes new policies by breaking hard budget constraints, and it should be compete with other demands. So other demands mean here, uh, the government wanted to uh, increase, the government wanted to improve the economic growth and capital expenditure, but the government the budget requires more amount of money on these ways, interest payment, the loan repayment, and recurrent budget. So it has more demand, right? You should have a comprehensive view. So discipline could be in a coupled with discipline coupled with economy also implies that budgets should absorb only the resources necessary to implement government policies. Now, when government allocate money through the budget, they have to allocate money for necessary resources necessary to implement government policies. So, government not to spend unwanted money. So, what are the things are very important? The government should allocate money only that activity. The government, the budget, not spend their money to unwanted things. So discipline, that's why I call it discipline. They have to have a good discipline. They have to have their government should have their own discipline. They have self-control. So this discipline always coupled with economy. If the government does not have any discipline on spending public money, then our economy will be harmed. Be harm. Also implies that budget should absorb only resources necessary to implement government policies. And government not uh, not spend unwanted money. Legitimacy, legitimacy, legal. No, it's kind of legal. So right, the when when the government proposes budget, it should it should align with the legal arrangement, political arrangement. It should be inconsistent with the constitutions and existing laws of the country. So the legitimacy means that the decision makers, the ruling party decision makers who can change the policies during the implementation, right? The decision makers. The decision makers mean who? The governing party. The governing party has the power to change the government policies, and they have power, they are responsible to implement the government policies. So the decision makers must take part in and agree to the original policy decisions. The government has its own policy. And so in the government, the ruling party is there. The government consists of ruling party. So they are the policy makers, they are the policy implementers. So those people should take part, they have to contribute. The policy makers have to contribute to develop government policies. And also, once the government set up the policies, they have to agree on that. They have to agree on that. So they don't want to uh, act against on that. Right? So they have to agree. So the government parties are not oppose the government policy. They have to agree the original policy decision, whether it is made independent of or during the budget formulation. So regardless, so whatever the stage, so they have to agree, they have to take part in the government when making policies, and also they are implementing the decisions. So they have to contribute during the budget formulation and before and after that. So the legitimacy also means that decision made during the budget process should focus on those affect the policy. So the decision made. So the budget, when we look at the budget, we can find out what is government policy is. What the government policy is. That's a budget is a document. So where we can understand what is where the government getting money and how the government is going to spend money. So actually is what? It's a government policy. When collecting revenue, what are the policies the government follows, implement. So whether the government wanted to increase more taxes, whether the government wanted to raise more debt from other countries, or the government wanted to cut the cost, that kind of things. So on which areas government going to spend money, that kind of things you can find. So the budget is is a tool, so on which you can understand what is the government policy is. So legitimacy also means that decision made during the budget process should focus on those affected policies. So the budget should be in line with the government policy. Associated with legitimacy is a principle that line agencies should decide how to make best use of input. Line agency mean line ministries and government government uh, department, and other agencies like central bank and government corporations, so like that. So when government allocate money, so they have to make best use of the input. Mean what? Input here means the money allocated by the government, and that the community and the private sector should make decision they are best in place to make. So not only the line ministries or line agencies should use the public money, and also the community, the citizens, the community, and the private sector also make decisions. So they are best placed to make. Flexibility. Flexibility is linked to the concept of pushing decision to the point where all relevant information is available. Flexibility is linked to the concept of pushing decisions of the point where all the relevant information is available. It means, but earlier someone take decision, right? So on that point, the government does not have all relevant information, but The later they understand that uh, they have received a lot of information, and the government realized that they have taken a wrong decision. So this time the government wanted to revert their decision, earlier decision, to the most appropriate decision because of the information. So best example is the earlier the government policy on green economy, organic economy, organic agriculture, right? Sorry, not organic economy, organic agriculture, fertilizer. So earlier they have a rigid rule on importing of chemical fertilizer. So government not allowed to import chemical fertilizer. Later on, the government get more and more information. So they have understood what are the adverse effect on the stoppage of uh, import of chemical fertilizer. Then the government reversed their decision. So this is called what flexibility. Called flexibility. So in the previous year budget, the government uh, take wrong decision, and throughout the implementation of the budget, so they have understand that they have some sort of issues. So they have taken a lot of relevant information. They have obtained relevant information. So accordingly, they have to be flexible. So flexibility is linked to the concept of pushing the decision to the point where all relevant information is available, not the rigid one. It's kind of flexibility. So operationally, managers should have authority over the managerial decision. Programmatically, individual ministers should be given more authority over the program decision. You know, in the budget, the money is allocated to a particular ministry, and the budget clearly explain how the money should be spent. How should the money spent in the particular line ministry, and also the minister has authority authority to manage the fund allocated to the ministry. Sometime when they are proposing the budget, they have allocated money for different purposes, but throughout the implementation of the budget throughout the period, the minister thinks that they wanted to spend money on a different activity against the uh, activity proposed in the budget. So the minister should have the power to spend that money according to their uh, what the program, uh, right? The program that will give more value to the public. They are not rigid on the budget. So time to time, based on their necessity of the country, they can uh, they have some kind of flexibility. They have to have some authority to manage the fund. Here, operationally, managers should have authority over managerial decision, and programmatically, individual ministers should be given more authority over the program decision. This must be accompanied by transparency and accountability. Transparency, accountability. Minister has the power to spend that money because the government gives more power to spend that money. So when the particular minister spend that money, they have to be a transparency. When transparency is there, then there is less chances to abuse the public fund. When there's less transparency and accountability, then there's a chances to make more fraud, abuse money. But it also requires tight strategy. too often, most probably in public sector organizations, implementation is tight but strategy loose. So what happened in many countries? So whatever the amount is allocated through the budget, they can do that task only. That task only because they are very uh, they are very rigid. They are very concrete on budget implementation, and they have no power to revert the money to other programs within the year. It may it may not in line with the budget. Here, the implementation is tough. Implementation is very tight. Which means whatever the activities proposed in the budget, the money should be allocated on that activities. So they are not permitted to deviate from the budget. That is the thing we can find in the present budget. Contestability, contestability. Always there is a competition, right? All the times, one policy is superior to another policy. For example, uh, organic fertilizer and chemical fertilizer. So which policy to be implemented? Each policy has its own benefit and own risk. So these two policies are competing to each other. So they have to choose the best one. So contestability in policy development and service provision. Policy development and service provision is a quid pro quo, which means exchange to one another. Quid pro quo means what? Uh, so give one thing and get another thing. So this kind of exchange. Quid pro quo for great predictability, as it ensures that existing policy is subject to review and evaluation, and the line agency performance is subject to continuous improvement. So what does it mean? What does it mean? Say earlier government proposes this kind of policy. What's the policy? So organic fertilizer, organic agriculture. They have a policy, but later on they have revised the policy. They have made some adjustment on that policy. It means what? It's subject to review and evaluation. There is no better policy all the time. So it is that each and every government policies are subject to review. Subject to review. It means it's a kind of competition. Competition between policy 1 and policy 2. Policy 3. Sometimes policy 2 is better. Later on, they realize that policy 3 is better than policy 2. Again, they realize policy 2 is better than policy 3. So like that, it's a continuous improvement. Predictability. Predictability is important for efficient and effective implementation of policies and programs. Predictability. So the executors should understand. So what will happen? What will happen? So if the government implement a particular policy, what will be the outcome of that policy? If we are unable to predict what will the outcome of the government policy, it is not a good budget. The public sector will perform better where there is stability in macro and strategic policy. But unfortunately, our country does not have stability in strategic policies. Every year, government has their own policy. Each government, each ruling party, they are having their contradictory policy. The public sector will perform better where there is a stability in macro and strategic policy and funding of existing policy. So best example is India. So India is having a policy, economic policy. So whatever the government come to the rule, come to the power, they are maintaining the existing policy. So they are funding existing policy. But in our country, every year they are proposing new policies over and over, right? They are proposing new policies. This requires attention to balance between short term and long term. Short term, when the government propose any policies, they have to consider both long term and short term. So what was really happening in the recent past regarding to the organic fertilizer policy? So in the long term, it's very helpful, awesome, right? Excellent policy. So in the future, for the long term, this policy will be success. But in the short term, it make lot of issues, economic issues, food issues in our country. So that is the origin. That is the origin of food crisis or an economic crisis in the country. So in the short term, it is not effective one. So that's why the government revert again the policy. So when they are proposing any policy, they have to balance. They have to have a balance between short term and the long term. The fiscal policy must take account of need to ensure timely flow of fund to program and projects. So once the money allocated to each activities and the policymakers, the finance ministers should ensure that money will be allocated on timely manner. Sometime what will happen? Government already allocated money through the budget to a particular activity or particular task, but when they implementing the activity, no money available, no funding is available. Policymakers must take account of the need to ensure timely flow of fund, or the government already planned to get some amount of money, some portion of money, right? But the government is unable to collect that expected money on timely manner. So this requires a medium-term approach to the adjustment of budgetary imbalances, program development, and valuation. Honesty. Honesty denotes a budget derived from unbiased projections of both revenue and expenditure. So when the government prepare budget, proposed budget, the ultimate purpose is to create value to the public. So there is no bias in projection of prediction or the funding, the possible way of funding opportunities and the possible way of spending money. So ultimate purpose is to give create value to the citizens. So honest denotes budget derived from unbiased projection of both revenues and expenditure. So government does not have purposefully spend that money or purposefully uh, collect revenue for their own programs, own agenda. Sources of bias can be both technical and political. So sometimes the politicians make bias for the political purpose. You know, in current scenario, so why government reluctant to get loan from IMF? Why? Why government is reluctant to raise money during this crisis from IMF? It's what? The political motive. There are something, the political bias. Source of bias can be both technical as well as political. So they may have a political agenda, or they may have a political issue, a technical issue. Technical issue means what? Actually, it's a policy problem, policy issue problem. Technical. So sometime the getting money from IMF later on will adversely affect our country. This is what a technical uh, source of bias. Political bias, when we some a particular opposition party member requests the government to get the money from the IMF. Because of that, his advice, we unable to go to the IMF. That's a political. And European Union nowadays, we unable to observe a kind, unable we unable to observe a support to the government at present. So we have human rights issues, and so there are a lot of issues in our country. So when a government wanted to get support from European Union, they will give a lot of conditions. They will impose a lot of conditions. So it's what? It's a political, the political reason, biases. So optimistic projections, optimistic, so good projection, soften the budget constraints, soften the budget constraints on strategic priority setting, and lead to failure to implement priority policies effectively enforced. So they have two things, positive side as well as the negative side. Then transparency and accountability. Information underpins honesty and sound decision making. Information underpins honesty and sound decision making. So when the government have enough information and government is ready to be transparent to the citizens, we can expect honesty. And when they take decisions, they will get a good rational decision because of the information. So when the government has lot of enough information, all relevant informations, they can take sound decision. And when they have a transparency, and they will be honest enough. Accurate and timely information on cost, outputs, and outcome is essential. Transparency and accountability. Transparency, no, transparency mean what? There is no biases, there is no hidden things, no hidden agenda. So that's called transparency. Accountability, they are answerable. The executives, the governing party, the politicians, finance ministers or cabinet ministers are answerable to the parliament. They're accountable. The transparency and accountability require that decisions together with their basis. So on what basis they have taken decision? On what? On what base? What is the rationale behind a decision? That's called what their basis and result. So what will be the outcome? And the cost, what are the costs incurred on a particular decisions? Be accessible. So in our country we have RTI, Right to Information Act. RTI. The RTI enhances the transparency. So due to the RTI Act, the government, the public can access all the government documents. Be accessible, clear and communicated. The documents, the informations can be communicated. Informations are clear enough. They're black and white informations. There's no ambiguity in informations. So to the wider community. Transparency also requires that decision makers have all relevant issues and information before them when make decisions. So the decision makers, the policy makers, when they take any decision, they have to have enough information. appropriate information. They have to have knowledge on all the issues, problems they are facing. Decision makers must be held responsible for the exercise of authority provided to them. So the ruling party has given a lot of authorities to make decisions, but they are responsible, they are accountable, they are answerable to the authority given to them in the parliament. So these are the essential as quid pro quos for greater flexibility and also increase the demand for accurate and timely information. Now let's see what are the weaknesses that undermine public sector performance. So what are the weaknesses in the public sector budgeting? What weaknesses? So due to these weaknesses, the public sector performance will be undermined. Public sector performance will be undermined. So poor planning. Poor planning is ultimately uh, weakness. Poor planning. No link between policy making, planning, and budget. The government policy is this direction, but the budget proposal is another direction. No link, no link between policy making, planning, and budgeting. Poor expenditure control. So there are a lot of abuses, abuse of money by the executives because of poor expenditure control. So poor internal control system in place. Inadequate funding of operations and maintenance. Inadequate funding of operations. Here for a particular operations, the government does not have enough money, or the government does not allocate enough money, enough resources to a particular operation. So what will happen? And also maintenance. You may observe that government construct a large building and a large bridges, but the government fails to allocate money for maintenance, especially the road network in our country. The government spend a big amount of money to construct a nice roads, but they are failed to spend money for the maintenance. That's what we call inadequate funding of operations and maintenance. The little relationship between budget as formulated and budget executed. So budget has proposed one thing. When they are implementing, they deviate from that budget proposals. So the little relationship. So fund is allocated for one activity, a particular manner, but when they execute the budget, they are implementing in different manner. So inadequate accounting system. So there is no proper reporting system of the performance. What's the cost? What is the benefit? So this kind of inadequate accounting system. So due to that, many executives gives the inadequate accounting system provide more chances to abuse the public fund by the executives. And unreliability in flow of budgeted fund to agencies and lower level of government. When preparing budget, when they're reading budget, they have allocated money a particular task, but when they implementing the budget, the government says we have no money, right? Sometimes the government not allocate money purposefully. So according to the budget, money is there, but when they're executing and they're implementing the things, money is not there. So so it's unreliability in the flow of budgeted fund to the agencies and lower level of government. A poor management of external aid. The government will get a lot of aids from other countries like US aid, Australian aid, JICA, and European Union fund and UN fund and SFI, right? So Kuwait fund. So there are a lot of foreign aids come into the country, but poor management of that external aid, poor cash management, poor cash management is obvious. Inadequate reporting of financial performance. So many government sector does not have uh, appropriate mechanism to report the financial performance. So it is difficult to evaluate the efficiency, effectiveness, productivity, economy, value for money of government sector organization. So these are the uh, weaknesses, and also the poorly motivated staff. Poorly motivated staff in the government sector, uh, they are give priority to the seniority, senior with regardless their performance, and some political influences in the promotions in government sector employment, higher positions. So many employees are poorly motivated. There is no such a system. For example, performance-based payment system. So this kind of systems are uh, very limited in the public sector organization. Now see what are the common weaknesses or characteristics of budget system requiring reform. Many of the weaknesses in the budgeting reflects the failure to address linkages between various functions of budgets. We have already discussed what are the functions of budget. The following factors contribute to budget system and processes that create disabling environment for performance. Disabling environment for performance in the public sector, both commission or by omission. So it's kind of mistakes or sometimes it purposely done. Almost exclusive focus on input with performance judged largely in terms of spending, no more no or less or appropriated in the budget. So how they measure the performance? So whatever the amount allocated for a particular activity should be spent. For example, 100 million allocated money for a particular project. So this particular institution, particular department should spend only 100, not more than 100 or not less than 100. So they have to allocate, they have to spend money as allocated, as appropriated. Almost exclusive focus on input. Input here mean what? The fund, the money. With performance judged largely in terms of spending, no more or less than appropriated in the budget. Input focused takes a short-term approach to budget decision making. Our country budget, they are preparing only 1 year, the short-term budget. We don't have a mid-term or long-term budget. So they are spending money for 1 year, the short-term. The inputs, the money allocated. The input focuses take a short-term approach to the budget decision making. Failure to adequately take account of longer-term cost and biases in the choices of policy instruments and current spend because of the short-term horizons. A bottom-up approach to the budgeting. That means that even if the ultimate stance of fiscal policy was appropriate game means fund allocation game, right? So there are ministers in the cabinet. So uh, they are try to impose their power to allocate more money to their ministries for fund allocation. So they are fighting for fund by the government from the treasury. So was the appropriate game playing by both line and central agencies. So it's led to the high transaction cost to skew bottom up picks to the appropriate fiscal policy box. So their power game may affect the government policy box, fiscal policy box. It means this kind of game will impact the public fund management. Tendency to budget in real terms. They are so you may heard about nominal value, real value. So the nominal value incorporate both inflation and inflation and real expenditure. The real one, they are forget about their price increases. It means they are forget about the inflation. So tendency to budget in real terms. So they are, when they are preparing budget, they don't consider price increases in the future. So leading either to pressure on aggregate spending where inflation is significant or arbitrary cuts. So finally what happened? They are preparing budget without considering future price increases. So in future what will happen when there is a lot of money spending in the earlier period and they have no money, no enough money to spend in the for the future, later part of the budget period, then they cut the cost. Some expenditure, some spending may not happen because of the government and preparing budget they are not consider the budget implications. So the inflation. So leading either to pressure on aggregate spending where inflation is significant, high inflation, or arbitrary cut during budget execution with adverse consequences at agency level. Cabinet decision making focused on distributing the gains from physical drugs across new spending proposals. When you look at the cabinet, each and every ministers, they have come up with own agenda, new spending proposals. So most of the time they have kind of gain, profit, right, with the profit motive. So when they are proposing more development, they have a lot of abuse of money will be there, right? So for example, they have proposed 100 million to construct a bridge, and government allocate 100 million, and what will happen? Only their work will be done only 50 million. Another 50 million will be distributed among the parties who are involving in the construction of budget. So it's kind of profit. So this kind of game is going on. Cabinet decision making focus on distributing the gains from the financial tract across new spending proposals. Now almost every ministers are proposing new spending, new projects, because they have gain on that. Cabinet and or central agencies extensively involved into micro decision making. Micro decision making means, so they have kind of bias. It's not a rational decision. So it's kind of micromanagement. Micro decisions mean what? They are taking decision uh, to destroy the counterparty or to uh, increase, to uplift their self wealth, own wealth. So cabinet or central agencies extensively involved into micro decision making in all aspect of funding ongoing policy. So when government allocate money, the central agencies, cabinet ministers wanted to take decision on micro level. Their decisions will not give any benefit to the community, rather they are focusing on self benefit. Last minute across the board cut, including during the budget execution, there are some kind of cost cuts. Weak decision making. quick decision making and last minute cuts cause unpredictability of funding for existing government policy. So this is highlighted for the to the center by the by central budget agencies on the alert to identify and rake back fortunate savings. Strong incentive to spend everything in the budget early in the year and quickly as possible. So what they do is, once the government allocated money for 12 months, next 12 months, they try to spend all of their money in the beginning part of the year, because sometimes government may give not money, may government may not give money in the later part, allocated fund in the later part. So a strong incentive to spend everything in the budget early in the year as quickly as possible, since the current year spending is the starting point for the annual budget haggle and fear of across the broad cut during the execution. Existing policy itself is as opposed to the funding subject to very little scrutiny from one year to the next. So this and the previous point epitomize the worst dimension of incremental budgeting. So poor linkages between policy and resources at the center, between center and line agencies within the agencies, because incremental budgeting. The lack of clarity as to purpose and task, and therefore poor information on the performance of policies, programs, services, and cost because of their poor linkage. So there is no proper communications between the government agencies and policy executive people. The linking together in association with the point above, within the government department of policy advising, regulation, service delivery and funding, and aversion to user charging. Overall, few incentives to improve performance of resources provided. So these are the things we have discussed. If you want more information, you can refer this book. So any questions?